Hey everybody, welcome to another episode of Stock Talk. This is episode 29. My name is Amin Rain. I'm an investment coach at Sage Investors. And I'm kind of walking into this episode with a little bit of trepidation because it's something I really had no desire to really go to. That's this whole concept of millennials. Like, it's just everywhere you go, there's just some kind of article or some kind of commentary or judgment call or something about millennials, good and bad, and the whole business world trying to wrap their heads around how to sell products to a certain demographic, and it's just like overkill at this point. But so I really was like, oh god, do I really want to weigh in on this? So at the end of the day, I decided to, okay, I'll say something about it, try to weigh in on it, because there's something to be said about it. And I thought I'd take a little take on it, look at the millennials kind of an approach into how the financial services industry really is approaching marketing to millennials, various different kinds of investment products and services out there. So that's pretty much what I want to talk about a little bit now. So really, let's start off with the foundation, and this is basically stuff that I think we've heard enough about, which is this whole profile. Okay, what a millennial is, what's a profile, typical profile, and in some cases, what are the kind of the stereotypes of that are out there about the millennial demographic generation. Well, we know lots of things. We know that they're very motivated to learn. They're like a very educated, well-educated demographic. They're very tech savvy, really well into the whole social media kind of experiences, very relationship-based. Technology is a critical part of the relationships. At the same time, they also want to contribute to society, make the world a better place. And also at the same time, because of the higher level education, the loyalties, sometimes can be, loyalty may not be a factor in how they approach their job, relationships, all those things. These, am I saying anything profound here? Probably not. So what I really want to talk about is, what is the financial services industry doing to market to these to this segment? And there's really, to me, there's almost two different approaches that are being taken in terms of selling investment products and services to millennials. One is the newly emerged disruptor kind of companies that you're seeing out there, the FinTech kind of companies out there, which are catering or trying to appeal to that tech savviness of millennials, and that they want to function in society, leverage technology to allow them to do the things they need to do to function in society. And so the disruptor kind of companies out there, which are basically the companies like your Roboadvisors, which are out there selling an online kind of solution to managing investing money, is pretty much in the face. It is the concept right now that it looks like, when we talk to experts, it's going to disrupt the whole financial services industry. That element there is in full effect. And what's that doing? So what is that whole thing doing? What's the arrival of FinTech and all these disruptor type companies and services out there doing? Well, it's creating, ironically, what they're promoting essentially is a more detached performative investing. They're basically saying that passive investing, investing in a basket of ETFs and having a computer or an algorithm manage that and rebalance it and do all these things to it, is a much more effective way of getting long-term value and creating more wealth out of people's savings. What that does is it creates less engagement. And one of the things I've learned being an investment coach is that, what I do revolves a lot about teaching people how to invest and be more aware of their behaviors towards investing, is that to get people to learn something, to get more experience at something, you need two things. You need to practice, and you need to get immediate feedback. And so a lot of the tools out there and services that are being promoted, and especially targeted to millennials, do a really good job of giving you the feedback, because technology is such a great medium to give you immediate feedback on your investments, your portfolios, your savings, your bank accounts, and all that stuff. But what it doesn't do very well, and what these services do not do very well, is they don't give you that opportunity to engage in terms of practicing, learning the disciplines and principles of how to, in our case, making better investment decisions. So when you have little practice but a lot of feedback, you may that to me serves the seeds for really getting very little engagement. And I find the people that are really more successful at investing, people that do a really great job at investing, are constantly engaged in the process. And that means even if you're investing in passive, vanilla-oriented ETFs or investing in individual stocks like Starbucks or Apple or Uber or whatever the hell it is, you're engaged in the process all the time. And what I'm seeing is that a lot of the services that are coming out that are being targeted to millennials are not serving that function. They're giving them the technology, but they're not giving them the quote unquote the ability to practice, to engage in that process. They may be giving it at a very high level, but it may not be really what people need. And the flip side of that, and what could cause really concern in the long term for a lot of these financial institutions and companies and investors, is that should the time come when a stock market goes under a really severe correction or a crash or a real pullback and we enter a period of economic malaise, is that given the nature of how millennials behave, the loyalty factor is that if they're not getting the performance, they're just going to, compared to other maybe generations, they're just going to up and leave, and they're going to move. They're going to switch to somebody who's going to deliver that kind of performance. And that, what that impact of that is in terms of how companies are managing portfolios is that they're probably going to hold more cash in their portfolios, which ultimately is going to lead to a bigger drag on returns, and it becomes a vicious circle. And so that's something I'm seeing right now that I think is concerning to me in how millennials are being targeted and sold to, is that they're being sold an experience, but maybe not being sold an opportunity to practice and engage in the process, which is a critical component to becoming more financially literate, to becoming a much more effective investor and a successful investor, is being engaged in the process. So I just wanted to kind of weigh that's one side. So that's a disruptor side. Now the other side of that is, what are the traditional financial institutions, your banks, your mutual funds, what are they doing to make their value proposition towards millennials? Well, they're offering, again, it kind of builds on it, but in that they're offering more online platforms, instead of banking online, trading online, buying insurance online, buying car insurance online. They're offering a really good interface, the front end again of the service, making it easier to sign up for a lot of these type of basic financial kind of products and services. The back office is really great, but unfortunately, what that's doing is it creates an environment, especially when we're talking about investing. Online trading is how different is it from like FanDuel or a casino, going to a casino, doing online gambling, and they're kind of creating the experience that investing is almost like a game, like it's like gambling. And what it's doing, what I'm worried about, is that the way it's being marketed again to millennials and basically anybody, is that it's creating this sort of short-term kind of process of thinking short-term when making investment decisions, which adopting this trader mentality, this day trading mentality. And from a long-term perspective, we've known that just by doing that, commissions and all that is going to eat away most of your returns. And so the traditional financial services companies are seen to be going that way and trying to create that kind of experience. And again, from my perspective, I think it's long-term, I think it's not going to fly, because again, if they don't see, at the end of the day, you invest to make money. And if you're not seeing the performance, the experiences are great and everything, but if you're not making money, then you're going to move. And I think this kind of generation of investors, the newer generation of investors, is a lot more motivated and more willing to just say, see ya, I gotta go. And those people over there who seem to get it are gonna do it. Or they're gonna go the other way and say, you know what, screw it, I'm just gonna do it for myself. And I'm going to look for somebody who's going to help me learn how to invest. And this is where, like, what my practices does, where I teach and I mentor. So, and that fits in quite nicely to what, from a millennial perspective, is that they are very motivated to learn and learn new things and educate themselves, and are willing to spend the time to learn it. And, suffice to what other stereotypes I was saying millennials are lazy, they don't want to work hard. You know what? I don't buy it, and I think people at the end of the day want to do the right thing. They want to have a decent education. They want to be able to have decent jobs, and they want to be able to contribute to society, contribute to their jobs, contribute to their company, contribute to their family. And I don't think that's a generational thing. I think that's just a human thing. And it's interesting because the New York Times last week, they posted a really interesting article that kind of just slammed this whole obsession with this analytical concept of analytics and millennials and trying to figure out, what corporate companies are trying to figure out how to sell to these people. And the reality is, at the end of the day, millennials are no different, and Gen Xers and boomers, and we're all the same. We all want to just do the right thing. And, the mechanisms we use to get there might be different, but at the end of the day, our core beliefs, our core value system, our core behaviors that drive us on who we are, we're all the same. You know what? We're all human. Millennials are not some foreign alien being that just landed on this planet and is occupying us. They have the same values as any of us, you or me. So it's just interesting. And as I said, I was really hesitant to want to do this post because do this episode because it's just, it's such a beatdown now, on the whole thing. But I thought there's some nuggets as it pertains to investing that. From what I'm seeing, how millennials are being targeted and marketed to, that ultimately in the long term may not really. I think the financial institutions might find themselves wake up with a pretty rude awakening in terms of how ineffective some of this stuff is going to be, and how detrimental it'll be in terms of forging those relationships. So that's all I wanted to talk about today. And if you have any questions about any investing topics or anything you want to talk about, you can give me a shout through my Twitter handle @SageInvestors. I tweet about all my basic tweet all about my basic observations on the market on a day. I tweet all my own personal investment decisions that I make, so you can follow me in real time. Or you can go through my website, www.sageinvestors.ca, and where I blog and comment and talk about stuff that I do as an investment coach. So that's it. That's another edition of Stock Talk. My name is Amin Reina of Sage Investors, and we'll catch you again another time.